Welcome to The Explainer. Today, we're taking a really close look at Robinhood, ticker symbol HOOD. You've probably seen the massive headlines lately, with shares absolutely surging towards that $100 mark. Well, today, we're going to unpack exactly what is driving that insane momentum, specifically focusing on their massive new blockchain initiatives. The big question we're answering today, is this real, game-changing innovation, or just another hype cycle? Okay, let's dive into this. Back on August 18th, Robinhood CEO Vlad Tenev published an open letter that basically acted as rocket fuel for the stock's recent climb. He made this incredibly bold declaration, stating that we are entering a tokenization supercycle. That right there, that is the headline news, moving the needle right now, and it's basically the foundation for everything we're going to unpack today. To help us separate the hype from the reality, here is our roadmap for this explainer. We're going to define this tokenization supercycle, weigh both the bull and the bear cases, check in on the Wall Street consensus, run through the cold, hard fundamentals, and finally, leave you with some clear investor takeaways. Let's kick things off with part one, the tokenization supercycle and Robinhood's massive bet on the blockchain. Before we get too far into the weeds, let's actually define what tokenization means here. Tokenization is essentially the process of trading real-world assets, think things like stocks, bonds, and commodities, on blockchains. And why would you want to do that? Well, to enable 24/7 access and absolutely instant settlement. The crazy thing is, Robinhood is already doing this. Right now, their international arm is offering trading in over 190 tokenized U.S. stocks. We're talking 24 hours a day, 7 days a week across more than 120 countries. To power all of this, they've launched the Robinhood Chain. It's an Ethereum-compatible blockchain built specifically for handling these kinds of assets. And get this, in just its first month, this chain processed over 100 million transactions. 100 million! That makes it one of the absolute fastest-growing chains in the history of crypto. And that wild momentum is already translating into massive, massive dollars. $90 billion to be exact. That is the year-to-date trading volume we're seeing on this chain, which represents a staggering 800% year-over-year increase. The sheer scale of adoption happening here is exactly why the entire market is paying such close attention. But to bring all this to their massive U.S. retail base, they really need regulatory approval. Because of that, Robinhood is aggressively lobbying in Washington for something called the Clarity Act to secure a solid U.S. legal framework for digital assets. There have even been reports of Tenev meeting with former President Trump to discuss this exact legislation. Which naturally brings us to Section 2, the bull case, why investors are piling into HOOD. Now, what's really interesting about this bull case is that it doesn't just rely on one single metric. It rests on four really solid pillars. First, there's that massive tokenization growth opportunity we just talked about, completely changing the game with 24/7 trading. Second, if you look past the crypto noise, their traditional core brokerage business is actually thriving. Third, their prediction markets, where users bet on political or sporting events, are absolutely booming. To put that in perspective, event contracts generated $6 billion in volume in July alone. And fourth, they are aggressively expanding all these offerings internationally, opening up a massive new addressable market outside the US. Let's anchor this growth narrative in some hard data, shall we? Look at their Q2 2026 revenue. They hit a record $1.31 billion. That is a massive 32% increase year over year. And on top of that, their high-margin recurring subscription product, Robinhood Gold, it now boasts 4.8 million subscribers, up 39% from last year. But we have to look at the whole picture. Section 3, the bear case, blind spots and major red flags. As your host for this explainer, I've got to play the impartial referee here. Because for every bull, there's a bear. Here are the four major red flags you need to know about. Number one, they have a heavy dependency on crypto, which makes them highly vulnerable to wild market swings. Number two, their earnings estimates are actually falling right now. Number three, the stock has a very expensive valuation. And number four, there's massive regulatory uncertainty out there coupled with deep, deep competition. Heavy hitters like Coinbase, Gemini, and even traditional giants like Fidelity are exploring this exact same tokenization space as we speak. To really understand that first major risk, the heavy crypto dependency, we just need to look at the recent drop in retail trading. With retail traders pulling back, crypto trading volumes actually dropped 48% in Q1. And by Q2, crypto revenues fell by a whopping 43%. That is a massive hit to their bottom line. And it's causing real concern on Wall Street. In fact, because of this slowdown, analysts recently slashed their 2026 earnings estimates by 20% in a single quarter. Moving right along to Section 4, Wall Street Consensus, dissecting massive market uncertainty. So while the overall consensus rating for Hood is technically a buy with an average target of $120, looking at just the average completely hides the real story. Wall Street is totally fractured on this stock. On one hand, Bernstein has a massive $160 price target, clearly incredibly bullish on the tokenization upside. But on the exact opposite side, Morningstar places fair value at just $52, suggesting the stock is massively overvalued right now. And this brilliantly illustrates the extreme divide among analysts regarding Robinhood's true intrinsic value. Let's get to the bottom of this in Section 5, Fundamentals and Valuation, the cold, hard numbers. Let's completely strip away the narratives for a second and just look at the raw metrics from Q2 2026. Robinhood's price-to-book ratio is currently 9.0 times. For context, the industry average is just 2.6. Their price-to-sales ratio is sitting at nearly 21, whereas traditional brokerages usually sit around 4 to 5. So the crucial point here is this. Robinhood is absolutely not being valued as a traditional brokerage. It is being priced for perfection as a high-growth fintech company. Now, if they fully deliver on tokenization and prediction markets, sure, the math makes sense. But at these incredibly high multiples, there is very little margin for error. Let's bring it all home in Section 6, Investor Takeaways, How to Position Your Portfolio. Let's connect all of these corporate numbers directly back to you and your own strategy. If you're a growth-oriented investor with a high-risk tolerance, Robinhood is actually a really interesting speculative play right now. I mean, if the US approves tokenization, this stock could potentially double. But if you're a value investor or tend to be more conservative, the right move's probably to just watch from the sidelines. Wait for some regulatory clarity or at least a better entry point. But whatever your strategy is, position sizing is absolutely critical here. If you do buy in, keep it to a small portion of your portfolio. We're talking no more than 2% to 5%. As you continue to monitor this whole space, keep a close eye on this timeline. We literally just saw prediction market volume hit $6 billion in July of 2026. Looking ahead, you're definitely going to want to review that critical Q2 earnings report that dropped on July 29th. And most importantly, track any future regulatory announcements coming out of the SEC and Congress regarding digital assets. Always do your own research, actually read those earnings reports yourself, and keep a very close eye on what Washington is doing. Which leaves us with one final fascinating thought to ponder. Is Robinhood truly engineering the future of finance? Or is this simply a fintech bubble that's just waiting to burst? Let us know what you think. Thanks so much for joining me for this explainer. If you found this breakdown helpful, please hit that like button and subscribe for more deep dives. Keep learning, and I'll see you in the next one.